6/22/2013. What do we have before us? We have the NASDAQ 100 Volatility Index. Below us, look at what we have here. The S&P 500 Weekly Volatility Index. How is it made up? What does it mean? What does it represent relative to what side of the market I want to be in? Okay, so let's just take a look at it this way. What side of the market do I want to be in? And what representation is it in? Is it in a bull representation in price? Representation in price, a bull move? Or is it the bear? The bear move. The one that you make money in volatility. And that volatility has not been here in the mathematical price ranges for several calendar months. We said that 522 is where you would start to see that volatility coming in off of Bernanke, the FOMC meeting. The last meeting that we just went through was another 2-day FOMC meeting. And how those meetings were represented and what side of that bull or bear took control of the market. Well, in price volatility, the bull gets its side of volatility to the upside, and then the bear gets their side of volatility in price to the downside. So when making your adjustments, you want to know that markets are selling off when this fear indicator has peaked. And oh my goodness, it's a weekly chart, and the 100 weekly moving average, it tested it, man. Look it up here. The green line is a 200 week moving average at 20.68. You hear me? So basically, what we're going to take a look at is the following. So back to the volatility index and the VXN. Is that we have to understand the most important thing is what side of the call market, what side of the put side of the, and this is all as a market maker in the option pit now. So basically what we want to know is that when we're looking at the high end of 2150 and these weekly moving averages, which are very significant, but look at the bottom handle. Look at that bottom, this line right here, the blue one. That's a 10-week moving average right now at 1480. But it crossed above your 20-week moving average at 1395. And they're rising. Now, it's only the very beginning. Look at, they've been in a very long decline right here, but then they actually flattened out. And this is where that 1, 2, 3, and 4 weekly breakout to higher highs on the S&P 500 Volatility Index, and we clearly stated back May 22nd of 2013 that you would have for the foreseeable part of the summer extreme elevations that would come into play in the fear indicator before markets can get on sell. And this is a ascending weekly base, and that's on the S&P one. Now let's take a look at this one right here. Here is a weekly here. Let's take a look at the NASDAQ 100 Volatility Index, and we have it right above us right here. There it is. Now look at its ascending base breakout up and testing. It's now this is related to the NASDAQ 100, okay? It's the leadership stocks that the MMT equity market makers and market makers in the option pit trade too. But here's the thing. For the elevation, that means that the put side of the market at its current level is elevated in the short-term price movements based on 5 calendar trading days to 10 calendar trading days, and then ultimately the distance of 20 calendar trading days. And one of the things that we look at is where that first calendar year call and put ratio is getting some adjustment in its current market values. Now, with the price volatility going higher, that side of the market's getting on sale. So, we're going to be taking a look at our 10 best market maker high beta stocks where their call and put ratio is so that we can get our entries and our exits. Okay? Period. And what side of the market in a short-term bottom phase is that both of these have tested significant moving averages on a weekly level. Now, in the very short term of the next 5 trading days, there is going to be the quarterly end of the month type rebalancing act with your retail people in the market, such as institutional people. You know, what are they doing with their portfolios? Are they trying to lighten up for the first time? You know, did that bull sentiment get at extreme levels as well? Yes, it did. So when the fear goes higher, stocks have been selling down. It was a rough week for all indexes included. Not only that, MMTs, here is the most wonderful thing about it. It was long overdue, but it really hasn't played out its full course because of the calendar earnings that are coming up in July is going to have a major player within the overall price volatility for the summer that we said would increase, and that markets would return to a more balanced approach for both trading the long side and also the bear side for the short side. In price cycles of 20 days, starting with 5-day compounded and 2.5 days in the middle, within the actual price structure of both sides of the market, both sides of the move. That's the most important thing. So the fear has done its thing up here. One of the things that we're going to do is show you here on a daily level of what that gap up was, and that's that quadruple witch that was in play last week. That you had 4 expirations in the marketplace happening at one time, and this is part of that movement. But let's take a look at where the top is. Now, this is the S&P. Well, here's where the last tops were. Just so you know, that was back in 12/12 of 2012. When that fear indicator had that reversal, we knew that markets were putting in the bottom, and we knew what side of the market, as a market maker, would we get the best value. We were getting the best value on the calls in the leadership 10 stocks that we're going to trade in price in that option pit. Period. End of story. So we know that the reversal will have to look like this on a daily level, but we've come up, we haven't quite tested the full high yet, but this is back when we were making lows in the indexes 12/12 of 2012. Now, let's take a look at this one on a daily level. The VXN, NASDAQ 100, back here in this calendar was 12/12 of December. And the value, well, that opened up that day at 23.32, and the high was only 23.81, and the low was 20.56. The last print of that period of time was 20.56, and it broke down. When that broke down, we were breaking out, and the call side of the market was the most deflated in price versus the puts, because when this is at its high, the put side of the market's up there too, and they got to come down, and just vice versa. The reason why we said the volatility was going to come into play, MMTs, was because the call side of the market was way up here, and they had to come down. And then the put side of the market has come from here all the way back up here on the put side. So you can see how the calls, when this is going down, the puts are going down and the calls are going up. It circulates is what it does. So when I'm going down here, my calls are breaking higher. When I'm going up here, what is happening? My calls are going down in value. The call side of the market goes down like that, and the put side breaks out. So I'm going to conclude it that we are at levels now that on a 60-minute daily level, what are we going to be doing? We're going to be doing the following. It's going to be right here, right now. We can see that at 20.8 on a 60 minute, how it had that reversal right here. And this one here is the NASDAQ 100. Now, if you go over to the S&P and go on to 60, you're going to find out very clearly here what the similarities of the two reversals were. That meant that during that quadruple witching hour, the electronic supercomputing buy scripts that are done in milliseconds, they were working at their very finest, because when that went down, stocks broke out in that last hour. But you can see it was only for a period of time. But you can see on the 60-minute level how this whole double top reversal for the lower end of stocks that has tested their major lower delta price support level in the MMT market maker platform, it's time to get ready to get net long in a short time. And that the rebalancing act is coming into play. So the fear indicator is the last one that I'm doing, and you can see on both of them now. You know that that's the NASDAQ 100 here. You know that this is the S&P 500 Volatility Index, and that on the 60-minute level and the 60-minute setup is what side of the market do I need to be on. And the thing about it is, if this holds support and starts to go back up, that means that stocks are going to sell off at resistance. I'll be getting net short on that first trade to get my money. But let's say that they gap down, then I'll be getting ready to move in and buy the call side of the market, and then the dips that would be bought at the lower support level in the price channel range and the market maker platform would have price support, and then they would leverage up in 3, 5, 7 teeny breakouts. And some of those teenies are 70 cents per line in some of the equities that we trade. So we're definitely setting up, and we're going into a major catalyst. They're going to rebalance the quarter, the upper end of the institutional bracket of people. So it's where their conviction still lies. Most of them still believe that it's the greatest bull rally ever. But hey, there's a lot of evidence that we need to say that that would ever really be the case. Right now, it's the beginning of a bull, but so it's going to have its ranges. There are the reversals. If we go down lower, then that means that the first trades on Monday is to get in at support and let them go up and buy the call side of the market. Now, on the flip side, if we're breaking higher, that means that the puts at their current value, if they get a pullback in that side of the market, they're going to be transactable because they have a support behind them. They have a support level behind them in that side of the market. So that's the actual trade management. This is the fear management. We know exactly where they are. We know what irrational exuberance is. There's lots of things about that. These things are created not always so much by people anymore, but high algorithmic super powered computers that can make transactions on buy prints in milliseconds. And you should watch the Ghost Exchange to learn more about it. You can watch the movie. It's an hour and 20 minutes long. It has a lot to do with what goes on. So here we are right here at a double bottom support. I'm going to conclude the fear indicator. The next one that we're going to be doing with the MMT market maker management is we're going to take the top 10 names with where the call side of the market is right now based on this 60-minute fear indicator in both the NASDAQ 100 equities and the S&P 500 top leadership equities that we trade.